Hello, everyone. The stock market on Tuesday had a little reversal. So it's a key reversal at a key important moving average, key resistance area. But remember, volume is huge here. And while today's technically a distribution day, volume is so well below average that it would be silly to come to a for sure conclusion that this is going to be a major reversal area. To be honest, I see us range bound. The September highs, the August lows. Nothing more, nothing less. Our NASDAQ model, basically, remember that half neutral sell signal? It's basically under a complete full sell signal again. So it's switching back to a operational sell signal. Could easily switch to an operational neutral signal within the next few days. These are all cosmetic, so don't look too much into them. But know that the trend overall is still clearly down. The Russell 2000 also, remember, above the 50-day moving average. Like I said, just getting back above the 50-day moving average doesn't put it into a neutral condition. Normally, once it retakes the 50-day moving average, we then need to see the 50-day moving average turn up unless we already take out a key resistance level like in September before it can change. So the Russell 2000 was kind of a, quasi-neutral, basically sell signal, completely back under operational sell signal. We've been so heavy cash the entire time, and all of our long positions have been so piddly that we've only churned a little bit of our account. So it's not that bad. It's keeping our toes in the water, and I prefer to invest like that. But tell you what, I've been saying cash is king for a long time. I stand by that based on the current action in the market. A lot of charts were hurt today. But moving over to the big cap stocks, NYSE, volume's well below average, so this could easily just be a little short-term dip. Remember, August, October, September lows, September highs. That's really what it's all about to me. Those late September lows in the Russell 2000, those September highs. We stay in between those range overall. I just have basically a neutral to short, bias. And that's why we do have some hedges. Before I get to those hedges, though, let's go over some actual sell signals. EPAM, because we're under sell condition, a big break below the 10-day moving average on very big volume is a sell signal. So EPAM is a 50% sell signal with a move below 76.28. HBCP, my limit was finally hit. And I'm back long this thing, and I already want to get out of half of it. This is why you shouldn't trade these things. So half the sell stop below 25.29, and the final sell stop below 24.31. Not risking that much, but this stock is so volatile, and at one point today it dipped all the way down to 25.29 or wherever it was, 25.30. I can't even remember. And my limit at 26.25 still didn't go off. It wasn't until later in the day when it went back above that level, came back down and traded out of that, it finally went off. And I tell you what, I don't know why I mess with stocks like that, just because, this stock I could easily see making a 10-20% move before a real sell signal. But Jesus Christ, good luck holding on to it. 50%. And then even more telling that this market's not ready to go anywhere, MMAC closed below the 1269 level. It got me out at 1255. Absolutely horrible fill, because at the time the low day is 1260. So I don't know where the hell my order got filled at, but I got filled at 1255 according to Interactive Brokers. Really, really, really bad. So right now my final sell stop on the entire position is below 1254. So at 1253, I will be completely out of the entire position. But it's basically over now. But I want to give that last support level a chance, just because it seems like in my life, every time I don't, the stock reverses higher, and I could see this one still working out. But not really. It looks like it's rolling over. The 50-day moving average finally is trending down, started to trend down on the 12th and continued today. Oh, wait, I'm actually way off. It started to trend down back there. So it started to re-roll over right here around the 5th whenever it gapped down on heavier volume below that level right on October 1st. But MMAC looks done, but I'll give it, one last final stand at this low a day right here, just because the chart is so nice and the position's so small and speculative. But overall, things aren't looking good. Some stocks that I wanted to get, kind of was like, oh man, and too bad I missed them. I don't regret missing them now. AMWD, DY. These are two perfect speculator quality names that I missed on the breakout because of low volume, and look at them reverse on higher volume. As I've always said, these kind of moves are subject to that PAM breakout on lower volume, heavier volume reversal. But you know, you can start to see it everywhere. This is the best short signal tonight, EROS. This was already a favorite before. I'm going to go check to see if Interactive Brokers has shares to short. If it does, I will be going short EROS with a buy stop above 33.09 at 33.10. But the bottom line is there's, you know, just a lot of bad looking stocks out there. You know, breakouts like JetBlue, you know, we're reversing on heavier volume. It's just not the kind of action that you see in a very strong market. ALK was trying to create a base, and now it's trying to break down. You know, biotechs look bad, which then brings me to our new positions. UVXY is giving a long signal off of its recent September support. So it's hitting September support. BOP is much stronger. Volume was above average today. And I want to go ahead and get some money invested on the short side in case this market wants to go ahead and retest those September lows. So UVXY, 2.5% of my account capital. If this was any other hedge position or short position signaling, it would be 5%. But because it's UVXY, it's a volatility-based instrument, 2.5%. And then also BIS, nice move today, surge in volume. BOP moved to a higher green level after declining the past few sessions, so it looks like it's back on the right track. A little bit more speculative, but it's an ad signal, so 2.5% of my account capital. First sell stop is going to be just below the recent low of 35.73, and on the final position I might do 33.68, but since I already have half of there, we'll see. But probably what I want to do is sell stop level here. Whatever my final position is, I'm going to split it off, you know, into you know what, whatever I add here, 2.5% of my capital, this is going to be the first sell stop. This is going to be the final sell stop. And what I have on the books right now is half my sell stop is here, half of it is here, and I'm just going to let those be. So the new position, half, BIS, UVXY, 2.5%, each position, add and long. But, you know, this market's just not looking good. Like I said, the stocks that I flagged today, you know, looking good. I'm KTA, there's no way I would buy something like that. MSG, I don't know about that. I mean, the MSGN is the other one. I in this market, I just don't know. Even though the Mets are doing wonderful, which makes me very happy. I just don't know about this one. And then SSNI, Silver Springs Network. You know, every time I see it, I always think it's like a silver because it's Silver Springs or a gold-related stock, and it's trading like them. And speaking of that, gold and silver, you know, continue to look good. So maybe it's a commodities-based bull market time as the stock market enters a period of, you know, poor returns. I really just don't see this thing, you know, working itself higher anytime soon. There's a lot of not too happy-looking chart patterns and or chart patterns that don't look that bullish. And I don't know. We'll see. I recommend staying neutral. Our models remained under a neutral sell signal mix. Cash is king.